For problem 5.3 in the demonstration packet, we're going to look at an expense transaction. It reads, on July 30th, Andrews Promoters issued a check for $300 to Ace Airways for travel expenses. So basically what happened is Andrews Promoters wrote out a check for $300 to pay for travel expenses. So number 1 asks which accounts are affected. Since Andrews Promoters wrote out a check, we know that cash and bank is one of the accounts affected. And our other account is a new account called travel expense. So for number 1, you're going to write in travel expense and cash and bank. Number 2 asks what is the classification of each account. We know that cash and bank is an asset account and travel expense is an expense account. For number 3, it asks, is each account increased or decreased? For cash and bank, we are writing a check, so money is leaving the business, so cash and bank is decreased. For travel expense, we are adding this expense to the business, so travel expense is increased. For number 4, it asks which account is debited and for what amount. If you look at your T account chart sheet that you have, you will see for expenses, the increase side is the debit side. So travel expense will be a debit for $300. For number 5, it asks which account is credited and for what amount. With every debit, you have to have a credit. So because travel expense was the debit, you know that cash and bank is the credit. And also by looking at the T account chart that you have, you will see that the decrease side for cash and bank is the credit side. For number 6, it asks us to put this transaction in T account form. So at the top of the 2 T accounts, you're going to write travel expense and cash in bank. And on the debit side of travel expense, you're going to write $300. And on the credit side of cash in bank, you're going to write $300. We have a debit and a credit that equal. Finish up the demonstration packet and then let me check it so I'm sure you're on the right track.